Okay, so welcome to this week's webinar. Thank you for joining us today or watching afterwards on the YouTube channel. Obviously, all of these webinars are all related to the Kickstart scheme. So, for anyone that doesn't know what the Kickstart scheme is, it's a really good initiative by the UK government, and Rishi Sunak is getting the credit of it because he's paying out £2 billion towards young people getting back into work. So anyone that doesn't know what it entitles, it's young people 18 to 24 that are currently unemployed as a result of the pandemic, either being made redundant or one of the 800,000 that come out of university every year that can't get a job. The government will fund them to work for you for 25 hours a week, and it's a great initiative. So if you're not already using us for that, then get in touch afterwards and we can tell you more about the Kickstart scheme and how you can help it to get your business to bounce back or grow in 2021. So today's webinar is we're very grateful for Kieran. Wave, Kieran, say hello.
Hi everyone.
Yeah, so we're very grateful for Kieran to joining us today to talk about all the little kind of details that probably aren't the sexiest thing in business. So apologies there, Kieran, but that they're also really useful that you get right as well. So Kieran's, I know Kieran really well. He's a great guy. He's kindly volunteered to help us with all the information related to the stuff you're seeing on your screen there. So I'll hand over to you now, Kieran, and you can introduce yourself and do a brief brief if that's okay.
Yeah, no worries. Hi everyone. So as Mark said, my name's Kieran James. I run an accountancy firm called Stryde. And basically our aim is to help people have a bit more financial clarity. So hopefully today is a little bit around that as well, helping you have some financial clarity. Most of what I'm talking about today is probably what people would consider to be the dull parts of employing people. But underpinning this, I think, is just a fantastic opportunity with the Kickstart scheme. Never before has there probably been a time where you can employ somebody at, in that kind of entry level role that is where you get the caliber of candidates that you're getting right now. And we're seeing lots of our customers take advantage of it and really benefit from it. So I would say, if those that are just sort of looking, do look. It's today I'm going to talk about a lot of stuff, and in my attempt to not overwhelm people, I'm trying to say this up front because there's a lot to organize employing people. But actually, if you get good support with it, which I would say, but if you get good support with it, it can make it a fairly easy process. So we're going to go through a couple of things today. Generally, I was asked to talk about payroll and pensions for beginners. So I could talk for hours and hours on this. My background is that I used to talk on pensions when automatic enrolment first came out for Sage software. I used to present alongside HMRC and the pensions regulator. And we talked for 3 hours just on automatic enrolment. So don't worry, I'm not going to be talking for 3 hours just on that today. I've tried to just pull out the bits that I think are most important. Hopefully I'll be able to answer questions that people have throughout the process as well. So if you do, please maybe drop a message in the chat, and my beautiful assistant, Mark, will be dealing with that. And other than that, we'll crack on and just sort of run through the things I think are most important when you're thinking about employing staff. So on the agenda today is obviously employing staff for the first time. We're going to talk about something called statutory payments and benefits in kind, which are parts of the payroll process, which are probably some of the most complex parts. And then we're going to talk about pensions as well, because that's a really important subject around this area. So at the beginning, the crux, or the basics of employing staff, the things you need to do are this. First, you need to decide how much you need to pay them. And there is a national minimum wage for different age ranges. So that generally it's £8.91 for those who are over 23. That's £8.91 an hour. But depending on somebody's age, there are different amounts. So if you're using the Kickstart scheme, for example, and you're taking people from sort of, let's say 18 or 20, there are going to be different pay rates for them, different minimum wages than somebody who's slightly older. Also, one of the most important things you can do as an employer at the beginning is, it's quite easy sometimes when you get an employee to jump in and kind of just try and employ them and think that everything's going to be okay. I've got a bit of feedback. Rosanna.
Yeah. Rosanna's in Stryde. Rosanna, can you get one of your profiles to leave?
That's fine. So the other thing we need to do is do what's called employment checks. Now, some of those are going to be really industry specific. So, for example, if you're working with children, you're going to be looking at things like DBS checks, which are a requirement if you're working, if your employees are working with with vulnerable adults. But there's sort of sensible things to do as an employer. Things like, you have to check that they're eligible to work in the UK. No matter what race, ethnicity, anything like that, you have to check those things. But you may want to do things like, if you've got a particularly sort of finance-led role, it may be that you do credit checks. You might check their references, or if they're going to drive, you might do some DVLA checks to see if they've got any serious issues with that. Some organisations even do public safety verifications to check that they've got, if they're in sort of finance or government or things like that. So it's worth doing sort of some pre-employment checks to make sure that employee is or fits the criteria that you need them to fit and doesn't have any sort of skeletons in the closet, as it were. Everybody who does employ must have employment insurance. So you can get employability insurance, and that is most businesses. Every business employee should get that. Sometimes you can get other insurances that can complement that, such as professional indemnity or public liability insurance, but definitely employment. And one of probably the most fundamental parts of employing somebody is making sure that you get them a contract and a job description, and you send them details of that, so they have access to what is their terms of working with you. And the reason I'm talking about this at this point is because most of these things that we're talking about now, these are decisions you make before you even employ somebody. You're making decisions about what you're going to pay them, what are the terms of that contract are going to be. You're not going to just try and do it on the fly. And those contract terms will determine how you work with them, how much holiday they get, what working hours they have, what rights they have as part of that process. Some are going to be legal, like the right to minimum wage, and some are going to be very much related to your business. Are you going to pay them, you're going to give them extra holidays, for example. And then as an employer, you'll need to make sure you're registered with HMRC. And I'll bang on about it, even though we're talking about payroll, you also need to automatically enroll staff, which basically means put them into a pension if they fit certain criteria. And we're going to come on to that a little bit later. If this is okay, making sense to everyone, if you can just in the chat, just pop in there and just say all good. And that just lets me know that I'm not just talking to myself. Fab, thanks. So the next thing we'll look at is, as part of that process, you do need to deal with HMRC when you are employing people. Now, some people here may already have people that work for them as subcontractors. So you might call them teachers or coaches or subcontractors or freelancers, whatever you call them. This is not what we're talking about here. So when we talk about employees, we're talking about people that you're going to pay through a payroll. And this is what the Kickstart scheme is relevant for. So you must register as an employer at least 4 weeks before you pay your staff. Or sorry, within 4 weeks of paying your staff, but definitely before their first payday. Now, HMRC reckon it takes about 5 days to get what's called a PAYE references, which is kind of like your unique identifier as an employer. But we know it takes a lot longer than that sometimes. So basically, just the earliest possible point you can, once you know you're employing people, start thinking about that process, and basically on that 4 weeks before you try and get your employer reference. And then what you'll basically do is every period that you employ that person, you'll submit a return to HMRC called an FPS, a full payment submission. Sometimes people call it RTI, real-time information. All these words, they basically just mean every month or period, submit that information that you've for your payroll to HMRC. And sometimes you have another submission called an EPS you do at the same time, which I'll talk about a little bit later, which effectively allows you to claim back certain statutory payments if you've had to pay your staff that, and allow you to, as a small employer, claim back up to £4,000 a year on employers' national insurance. So it can be quite a good way of saving a little bit of money as an early or small employer. Just one thing I wanted to point out, it's not really going to become relevant in the rest of what I talk about. So it's a bit out of place here, but it is just an important note for people to know about, which is, so for HMRC, the tax year, and you may, if you're self-employed, you may know this quite well, it starts on the 6th of April each year, and it runs to the 5th of April the following year, which means that, let's say you pay somebody monthly, your month, as far as HMRC is concerned, is from the 6th of one month, so let's say the 6th of April to the 5th of May. So it will be a kind of a rolling month. It's just important to note, because some of the calculations that they do actually go on that period, whereas we might think we're paying our staff for slightly different periods. So it's just an important note when talking to HMRC, they're always going to refer to those sorts of periods. Okay, so let's look at, I want to talk about employee rights. So actually just got a question there. Does that vary depending on your financial end of year date? No, it doesn't. Your payroll year is set for everyone, so everyone has the same payroll year. So employee rights. And I know we're talking to employers here, but I thought it was really worth just pointing out some of the rights that employees have. Obviously, we talked about minimum wage, but there's other things such as safe working conditions, which is becoming harder and harder to control at the moment. So, you know, you do have to have things like health and safety policy, which I'll talk about again a little bit later. But, you know, as people are working from home now, it becomes more important to start tracking how they're working. Are they working safely? You know, and it might just be that you have a video of their environment just to make sure that they're, you know, they have a seat. They're not just sort of, you know, sitting on the floor. I know it sounds stupid, but, you know, they're not sitting on the floor back against the wall on a hard surface doing their work, because obviously that's not very ergonomic for them. So that wouldn't be a safe working conditions. They're not working in a place where, if they're on the phone, that there's you know, they're right next to a building site or something like that. You know, you need to make sure they're in working conditions that are suitable for the job role that you're doing. Obviously in office space, the same applies. They are entitled to at least 5.6 weeks paid holiday a year if they're full-time, and that's prorated if they're on less hours. And it equates to about 28 days a year. Normally about 8 of those are bank holidays, so about 28 days a year. Now, employees are entitled to, depending on their particular demographics, it may be maternity, paternity, adoption, parental leave, and currently there is a certain amount of sick pay for very specific conditions as well, related to COVID, basically. Employees have a certain amount of rights at the beginning because they've got their contract that you've given them. But as time goes on, once they hit a certain length of service, they start to gain more rights. So at 2 years, they start to gain the right to redundancy pay and unfair dismissal, more unfair dismissal rights. And that kind of redundancy pay increases over time. So the longer an employee is with you, the more rights they do get to help protect them as well. And currently, although yeah, we don't know what's going to happen with Brexit and EU, whether these things will end up changing, but there's a maximum of 48 hours per week that any worker can work unless they opt out. So what if you know in your contract that somebody is almost always going to go over 48 hours every week, then you can put in there what's called an opt-out clause, and the employee can choose to opt out. They don't have to, but they can choose to opt out of that to allow them to work longer. Generally, that comes into play when people have a lot of overtime as part of their contracts. So retail's a prime example of that. But if you're employing anyone under 18, that limit is just to 40 hours. So there are extra rights if they're slightly younger, just to protect them. And finally, one of the rights they can do is employees have is for something called flexible working requests. So flexible working could mean anything. It could mean working part-time. It could mean shuffling the hours that they work. It could mean, you know, whether that's in a day, in a month, in a year, whatever that looks like, it could be changing the way that they work. And there are certain flexible working rights that employees have. They have to request it from you, and you can reject it under certain reasons, but they are quite limited. So rather than me actually go into that now, what I've got, I'm going to do this throughout today. Hopefully this will be useful. For those who are watching afterwards, what I'll do is I'll send Mark a list of these links so that he can add them into the video at the end as well. But I will drop into the chat a link around flexible working on that. It doesn't come up very often, but specific times it does come up is, for example, parents with children under 9 years old, have additional rights to look after their kids, for example, pick them up from school, drop them off nursery, whatever it is. So it is important just to know those sorts of things. Really, just to be aware of it. I find with some of these things, you don't always have to know all the details, but if you know what the top level rights are, when the situation comes up, you can then go and investigate, and you know what you're looking for, you know what to expect. I wish I had something more interesting to say now. You've just set that up, Mark. Cool. Okay, so to consider. So just a couple of things to consider here are you should have a health and safety policy. Definitely, it must be written if you have more than 5 staff. So if you're choosing to jump to 5 staff straight away, for example, then you definitely need it. But generally, it's good practice to have it. It just helps everyone know what's going on in the business and how to be safe. And as part of that, you may also, if you're in a working environment in an office or something, you may have a first aider allocated. Those sorts of things can just be useful for staff to know who to go to in certain situations, a fire warden, for example, and those sorts of things. You can make reasonable adjustments. You have to make reasonable adjustments to the work to make sure your workplace is accessible to those with disabilities or health conditions. So not every scenario needs to be accommodated, but you have to be fairly reasonable in this approach, so that you are taking into account that some people can't operate in the role the same way as everyone else. And you do also have to be fair across employees. So one of the biggest things here is, for example, if there's 2 employees with the same skill level, same experience, they've got the same sort of age and demographics, but you pay them different amounts, you're going to have a really good reason for that, because it looks very sort of unfair and discriminatory if you're starting to do it that way. So just most of this is common sense stuff. So I'll paste another link in there about reasonable adjustments. Again, these things, I'm not expecting everyone to go and read all of these. Just keep them somewhere safe. And if the situation comes up, you've got it so that you can go and have a look and you know where you're looking. Okay. I'll just pause a second before we move on. Do you want to just, if anyone's got any questions, pop them in the chat for a moment. If everyone's good, just say all good, and I'll know that it's all making sense. Allows me a chance to take a drink. Instead of just listening.
On this health and safety stuff and the HR thing, it's probably worth mentioning here that all the kids' activities businesses that are involved, that are members of the CA, will get access to that RAG system that helps them with a lot of this stuff as well, which is, you've seen it, and it's a really good system, isn't it?
Yeah, I've used the system. Yeah, it's fantastic. Even for somebody who knows what they're doing around this area, just ticking, it's very good at helping you both from a documentation perspective, but also from a physical perspective, checking things like it will nudge you to check right to work if you're creating a job contract, to make sure that you've included a job description in that contract. So all the things you need to have in place, and it will ask you the questions around it. So it'll help you think about the types of things you need to think about, if that makes sense. So yeah, it was fantastic. Really, really good.
Yeah, it's a great system, especially for those people at the kind of smaller end of the employment spectrum that aren't as used to this kind of stuff and don't have all the templates and HR health and safety stuff. It's really beneficial. So yeah, just thought I'd mention that while we're at this juncture.
Yeah, no worries. So we'll move on. So we're going to talk about dive into a bit more around actual payroll itself and what does that look like. So I want to just because I'm aware not everybody knows this. Sometimes we've been employees and we see a pay slip come our way and we don't really know what happens in the background. So I just wanted to talk through that basically. So there's a kind of process that you go through when you're running payroll, which is you're dealing with sort of anybody who's a starter and a leaver. You make sure that you've got that sorted. Then you look at anything that's changed in the payroll. And the reason I'm talking about this, because if you get a provider to help you with your payroll, these are the bits you'll have to make sure they have that information, because you'll have it and you'll need to pass that information on to them. So things like who is a starter and a leaver. Tax codes get sent down from HMRC, so that should be sent through. But things like overtime, bonuses, if pay changes, the hourly rate changes for somebody, all those things will be things you'll have to provide to your payroll provider to so they can run the payroll for you. Then what they should do is they'll be doing things like calculating the pay, so national insurance, tax, student loan, all the pensions, all these sorts of things they'll help calculate for you. Submit that payroll to HMRC every period, so depending on how often you pay people, and then they'll provide the pay slips. Normally they'll send them direct to the employees, and the bit that you'll have to do then is pay the staff and pay the pensions and pay HMRC. All the kind of reporting stuff generally gets done for you. So, there is payroll can become quite complex, and you can do it yourself, absolutely. But I generally recommend people to go down a provider route. I am very biased because we do payroll, but I just think there's so many intricacies that people can get wrong, that it's definitely worth it's not really worth doing yourself. Basically, it's just so easy to outsource. But understanding how things work is really important as an employer. So what happens when you get your first employee? So you're thinking, okay, I've got through that process, I've done all my contracts, I've sorted out everything that I think I need to think about at the beginning. What's next? So every time when that first employee comes on board, you'll also need to do those relevant checks, which we talked about. And then you'll make sure you get their P45 from their previous employer. So what would have happened is whoever they came from, they would have given them a P45, which they can then use. Now, sometimes they don't always have that. That's quite surprisingly common. So what you can do is you can get the employee to fill out what's called a starter declaration. Now, it's really important to do this. Often that means that saves you having to send information to your payroll provider. But what's really useful on this is the employee fills it out themselves. So any of that information, it's not you if something goes wrong, it's not you getting their payroll wrong, it's the employee. And if they're a good payroll provider, they will verify and double check that with the employee anyway, just to make sure they're not going to just sort of take it at face value. But it's fairly straightforward, the form. It just needs, it's asks for things like national insurance, date of birth, just the things that are really important for payroll. So for example, national insurance, HMRC, the way they verify who you are as an individual in the UK and your pay, so on your self-assessment, on your employee pay as you earn payroll, is they use your national insurance number to connect the dots. So things like that are really important, so that when you run payroll, the tax is calculated correctly if they've got, for example, 2 jobs, or if they're claiming marriage allowance somewhere else or whatever. And then obviously you have to provide them with a contract of employment on that first day when they start. And you may also, which I haven't written down here, but I'll talk about in a little bit later, think about things like pensions and look at whether they need to be enrolled into a pension. So that's day one. But then what happens is when you run that payroll, lots of things come up as part of that process, and they're generally what we call deductions. So things that come up actually that will affect the pay slip. So that's sort of particular pay deductions. But also there's things called leave. So you've got like your holiday leave, which is the obvious one, but things like statutory maternity, paternity, shared parental leave, these sorts of things. So this is where it's going to probably get a little bit detailed. I'm going to talk through these things. Again, the key thing here is about when this is relevant to you, to know what the rights are and to be looking at it and paying attention. But holidays is pretty much unanimous. Everyone will deal with this. So holiday is accrued for employees all the time. So whether you're working, whether you're sick, maternity, paternity, adoption pay, all these sorts of things, it's 28 days minimum, but you can offer more. So a lot of organizations, to help themselves stand apart from their competition, will give additional benefits to their employees, like extra holiday pay, company sick pay. So they might pay sick pay for 2 weeks at full pay and things like that. It must be taken within a certain calendar year. Now, unless you write it in the contract to be different, it will start when the employee first starts work on day one, and there'll be a year from that date. But generally, most people try and slot all holidays into the same calendar year, so it's easier to do sort of time rotating. So in our business, we have our holidays are January to December. It's just easy. At the beginning of every year, I always book out and tell my employees they have to block out some of Christmas, the following, of that year. So 12 months ahead of time, these are the times you're going to have to take holiday in Christmas, because it's just a very, very quiet period, and I don't want to be paying staff to be twiddling their thumbs in the office. So we tend to block that out. What we also do in our business is we don't let staff take holiday in January. because it's a very busy time of year in January as self-assessments come up. So you can, as an employer, have an element of control over those holidays. But you do have to just be reasonable in that. You know, it is a legal requirement that you try and get your employees to take their full holidays within each year. But if for some reason you can't, you can carry over, or so in general times, you can carry over 8 days to the following year, and that's generally agreed between employer and employee. Now, during COVID, the government have released some additional legislation around this, which basically means because lots of businesses have been caught, it's just a bit trapped with, you know, people on furlough, people haven't been able to take their holiday as much. They are allowing employees to take holiday over a 2-year, basically for the next 2 years. So they carry it to the next 2 holiday years. So that's just from that basic stuff from last year. It's going to be carried forward. That's quite important, I think, because, you know, it stops people trying to force holiday in at the end of this or it did stop people trying to force holiday at the end of last year. Okay, so let's jump into like holiday pay calculation. So I'm not going to tell you how to calculate holiday pay today because different scenarios calculate differently. I'm going to give you an overview of it, but for individual situations, there's so many different variables that it will be silly to do it in an hour webinar. It will take way too long to do it. But I'll give you a top level and I'll give you one scenario just to kind of give you an idea of how holiday pay can be calculated. So I've put on here just the different types of holiday pay calculations you can have. So you can have what's called a fixed hours or fixed pay holiday, which is what most salaried workers have. And that is calculated, for example, for the week or the month that somebody works. So there's a little example at the bottom there, which would say, let's say somebody's on a contract sort of 9 till 5, Monday to Friday, just like a standard contract. They have an hour lunch break. Yeah, what that would be is, it would be 35 hours a week. So they work sort of 9 till 12, 1 till 5 as an example. And that's going to be a total of 35 hours. They're going to, let's say they start, obviously if they're in there for the full holiday year, then you're looking it's very easy. You're looking at it's 28 days minimum because they're a full-time employee. If they're working, let's say they start in month 3 of your holiday year, month 4 of your holiday year, let's go for easy numbers, then you basically do the remaining period would be what you'd calculate holiday pay for. So instead of 28 days, it would be 21 days. So we'd take divide that 28 by the number of months, 12, and multiply it by the number of months that they're actually there, would be 9. So 21 days. Like I said, I'm not going to go into too many calculations because I appreciate people will start glazing over as we start throwing loads of numbers at you. So I just wanted to give a rough idea. But there are other ways of calculating it. So, for example, if people are on shift patterns, there's specific ways that you can average the number of hours people have worked, depending on how long they've worked for you. And obviously their pay might change over time. So it might go up, it might go down. So that you've got to take that into account. If, for example, your holiday year is January to December, it may be that if they're on minimum wage, the minimum wage increases during that time, and that changes the amount of hourly rate they're being paid, etc. So there are calculations on that. But what I wanted to stress is that those calculations are really important, because one of the most common mistakes we see on the other side of payroll, dealing with it for our clients, is people that, for example, and I put in the example here, that's why I explicitly use the example of the 35 hours a week, people thinking that their staff work 40 hours when they don't. They work 35 because they've got their legal lunch breaks or legal breaks they have, or whatever's in the contract. So that's important, because that changes the amount they're being paid per hour. Because if you're paying somebody, let's say minimum wage, at £8.91 an hour for somebody over 23, and you're basing that calculation off 35 hours, but then you tell us it's 40 hours, then what ends up happening is you actually end up paying, it looks like you're paying them below minimum wage when you're not really. So it's just important just to make sure that when you do that contract piece we talked about at the beginning, that gets administered in real life, I guess that's the disconnect we see quite often. Is somebody creates a contract thinking, oh yeah, that's really good, and then they just ignore that contract. But actually, everything in that contract about the hours, the sick pay, that's where you go back to make those decisions about how people are working and things. I'll just check. Is this all making sense? I'm not just waffling on here. This is making sense for people.
No, it's making sense. Kieran, on that, just relevant to the Kickstart scheme, what most employers have said is they'll start them on 25 hours and then increase their hours if they need it, and obviously if they're the right person and it's working out and all those sort of things. So, presumably that impacts it if you first 2 or 3 months they're doing 25 hours and then the 3 months after that they're
Yeah.
doing 36.
I mean, in a simple example, if there was 25 hours, if let's say somebody did work for an entire year from day one of their holiday year, and they did 25 hours every week all year, let's say that was there just for simplicity. And let's say depending on their working pattern, let's say they did 5 hours without a break, so 5 hours every day for 5 days each week. That becomes a very simple scenario, because instead of 28 full days, they would just get 28 5-hour days, or 28 times the 5 hours, if that makes sense. But when you start getting into hourly rates, you do have to make sure it starts to work on an hourly basis as well. And you start to work out, but there's always there's like as long as they have the 28 days minimum, then and whatever you've contractually agreed, then most software can actually help calculate these sorts of things for you as well. Or your payroll provider can help with that if you need it as well. So, but that's probably a common scenario. Yeah, I can see that happening quite a lot.
Okay. Oh, question here, just Amanda's put in. If they're part-time, do they still need 28 days?
No, it's pro rata, Amanda. So it'll be worked out depending on what their equivalent and what they work. So obviously, they're only working 4 days a week, for example, then it would be 4/5 of 28 days. Which don't ask me to work out on the fly. As much as I'm an accountant, it's been a long time since I do calculations like just like that. Okay. Let me just shuffle my stuff around here. Okay. So the next thing I want to talk about is statutory sick pay. So you must pay statutory sick pay to your employees if they are off work because they're ill. Now, there's the way it works is if somebody's off ill on day one, if they're off ill for just 1 day, they're not entitled to sick pay. Day 2, not entitled to sick pay. Day 3, not entitled to sick pay. But as soon as they're off for 4 days, they're then entitled to sick pay for all 4 of those days. And for the first sort of 7 days, they don't have to give you any proof. They can just self-certify saying they were ill. And you do have to, you do have to pay them sick pay if that's if you're paying, basically, unless you've got like a contractual sick pay. So you do have to pay them sick pay and give them sick leave. You used to be able to claim sick pay. You now can't, except if somebody is off because they're self-isolating, or there's a couple of other scenarios, but around COVID. Again, I'll drop that link in there for you. There's a couple of scenarios around COVID that people can take up to 2 weeks sick pay, and you can reclaim it as well if you're a certain size. So basically, most small employers can claim, but very specific to COVID. Then you have leave that's associated with a child's birth or adoption. So we'll start with adoption. This is really similar to maternity in a lot of ways, but I'll just talk through it, even though we're going to kind of repeat a little bit here, but I'll just go through it. So you get statutory adoption leave for up to 52 weeks. They call it 26 ordinary and 26 additional. So it's basically 52 weeks. Only one person out of a couple can take that, and it's paid from the time somebody is matched to a child. So the child's matching, I can't remember the exact time on that, I've gone out of my head now, but there's a specific time when your class is matched with a child, and you can get it from, sorry, beg your pardon, you can get it from when the child comes to you. From the time that you're matched with a child, you can get up to 5 appointments as well, sorry, which are paid employments on top of the 52 weeks leave. As an employer, you have to pay statutory payments. So just like adoption pay, all the others, you have to pay them. But you can reclaim this. So you can claim up to 92% of this, as most for most employers, or 103% if you're a small employer, which basically means you pay under £45,000 in national insurance a year. So it's quite a lot of most small employers get that. Now, to get that, you do have to go through a particular process. You have to do what's called an EPS, which I've mentioned very briefly in the past. And what you do is you submit to say you want to claim it. Again, payroll providers normally will do that for you, and they'll just do it as standard. You don't need to like ask them or anything, although it's worth checking. They'll just make sure that you're claiming for your allowance. And then you normally see the benefit of that in sort of April, May, that sort of time. So for example, this year, the allowance is £4,000. So the first £4,000, sorry, I'm mixing my stuff up here. Sorry, you can claim back the 92% for up to 103%. Sorry, you can claim 103% for small employers through that, but also through the EPS, you can claim up to £4,000 of employers' national insurance as well. So it can be quite a good way of saving money on, well, just a little bit of a kickback from the government for being a small employer, basically. Hope that makes sense. Can you just drop in the chat to make sure that's made sense? Because I appreciate I've just mixed two things up there. So you can reclaim for your EPS for statutory payments, but you can also claim £4,000, up to £4,000 of national insurance back as well. Before I move on, just make sure it makes sense to everyone. Thank you. Cool. Okay, so next one, we're going to go on to maternity. So similar to adoption, it's 52 weeks. You don't have to take all 52 weeks for maternity, but the birth parent must take at least 2 weeks off. Now, an employee does have certain rights, certain things that they have to do as part of that process. So they have to tell you at least 15 weeks before the due date. They have to provide a MAP B1 form as proof of basically proof that they're having a baby. If you're, they can go on maternity leave without that, but they cannot get any maternity pay without that. But there are certain eligibility criteria that you have to fulfill for that. So it's worth checking that. Again, I'm not going to go into all the details, but there's certain eligibility criteria of how much minimums they need to have earned with you, how long they've been with you as an employee, those sorts of things before they can earn their due maternity leave and or maternity pay. But if they are eligible, you have to pay it. This changes most years. So I won't go into the details on the exact amounts, but because otherwise I'll do it on all of them. But basically, you have to pay maternity pay. It's not a huge amount of money, but it is enough to keep them going, basically. So next one is paternity pay. Oh, sorry, paternity leave and paternity pay. So paternity leave is up to 2 weeks, taken in one go. So you can take 1 week, 2 weeks, whatever it is, but you just can't take 1 week, have a month break, and then take another week. So it's got to be taken in one go. Paternity pay can't be taken until after the child's birth. So the partner has to take it within the first 56 days of that birth. And that's, I suppose this is like maternity pay and paternity pay are what we class as sort of the original rules of sort of the traditional sort of man taking paternity, woman taking maternity. But I'm going to talk about in a bit some other scenarios as well that have come in to help share out the paternity or the parental type leave. Now, as long as there are eligibility criteria for this, you don't have to prove that there's a birth, but you do have to be connected to the baby in certain ways. So it is important that you fulfill certain criteria, and they can take unpaid leave prior to the birth for certain appointments. So you're probably getting the gist now that basically where a baby's involved, generally you can take some unpaid leave for appointments beforehand. Sometimes it's paid, sometimes it's unpaid, and then after the birth you can you're entitled to certain amounts of leave, basically. Now, as an employer, you have to pay statutory paternity pay for those 2 weeks, or however long it's taken. But you do need to be, you should be told ahead of time well before the due date, 15 weeks before the due date, or when the baby is due. Now, sometimes, like with all of these, sometimes babies come earlier. You can't predict a baby. So, there are criteria that if the baby comes earlier, then they can take paternity pay leave before that. They just have to make sure that they've told you where possible about that due date, as long as they, within that 15-week, before that 15-week period. And again, you can reclaim the paternity leave as well. Okay, before I move on, if you just drop in the chat, all good. So I don't know if you're, just to make sure that's all making sense to everyone. Mark's doing all the heavy lifting here, isn't he? Thanks, Mark. Cool, okay. So then we've got shared parental leave. So this is where, this is the government brought this in to try and make things more fair and to allow for the different type of parenting scenarios that we come across, rather than just the sort of traditional. So the parent must have, to be part of this, the parents must have shared responsibility of the child, and they can share the parental pay up to a maximum of 39 weeks. So you have to pay that if they are eligible for it. Again, eligibility criteria is involved in all of these things. A mother must take those 2 weeks that we've talked about, but then either partner can take up to 50 more weeks. So obviously, in terms of the maternity leave, which is 52 weeks in total, the mother must take 2 of those, and the other 50 can be shared between either of the partners. And then in terms of the pay side of it, so that's leave, actually just taking time off work. In terms of maternity pay, either partner can take the other 37 weeks of parental pay as well. And they can split that. So you can take it in blocks and sort of rotate. So I've seen people do that where they've perhaps taken a month off here, a month off there. I think this works quite well for those where maybe, in the past, it would have had to have been the woman that took the time off. But actually, from a family perspective, that woman might be in a job earning a lot more. Therefore, the partner can take time off, as an example. I'm saying this from traditional examples, but I appreciate there's lots of different examples that come up in this. But so this is quite a good one to really sort of be a bit more fair and share things out a bit more. So that takes us to the end of our kind of statutory payments process. That's where the kind of complex stuff comes in. Hopefully it's fairly straightforward from here on in. I think that benefits in kind are quite an important part of the process. It's probably something that is least known by employers, because it's something that rarely comes up from an employee's perspective. But a benefit in kind is something that your employer provides to you that is classed as, or the HMRC class as, a benefit, i.e. it's part of your wage. Now, as part of that, you have to pay a national insurance charge on that. So things like a company car, health insurance, gym membership, those sorts of things. So anything where it's perceived that you've got some sort of benefit instead of getting money, instead of getting actually cash payment, you've been given something else. And these have to be reported every year on a P11D or P11DB by the 6th of July. So each year you just kind of, the payroll year ends in April. You do your payroll year end process, and then you look at all the sort of benefits that were done during the year, and then you submit that information again by the 6th of July. And again, payroll providers would go through this process with you, as long as they're aware of those benefits that have been taken. Cool. We're going to jump into pensions now. So I wanted that to be an overview of payroll. And I appreciate that it's a whistle-stop tour. We could go through so many more different things on payroll. But I've tried to touch on the bits that come up the most common and just point out the top level of those. So if anyone has more questions around this, I am conscious that people may. At the end of it, what I'll do is I'll give you a link to kind of book some time in with me if you want to just have a chat through things and just get a bit of an idea. I'm happy to help people. Or feel free to ask a question now and we can go through it. If you're listening back, the link will still be valid. So you'll see it on the last slide as we go through. So now let's jump into pensions. So pensions are different to payroll, but they generally get kind of grouped into the same process because it kind of all happens at the same time. So pensions are managed by the pensions regulator instead of HMRC or TPR. Giving a pension to your employee is a legal duty. unlike payroll, where it's sort of more related to kind of letters and fines, the pensions regulator were really quite specific about, the fact that there's potential chance for employers to go to prison if they're really non-compliant. Now, before you try and get worried, that's only really the only time that's going to happen. There's an extremely long process to get to that point. It's going to happen if people are deliberately non-compliant and deliberately ignoring multiple letters of compliance and fines. And there really is a long process to get to that point. But what it does highlight is how important pensions are, and the fact that this is a legal duty. You must provide a pension to your employees. So what I'm about to say now is purely my opinion. There's no professional opinion behind this. It's a personal opinion. So please don't rely on this. But just what I've seen, I think it's quite important. It's something that's quite useful to think about. So about 50 years ago, there were 10 people paying national insurance for every one person claiming it. Now, I'm not sure what the numbers are now, but it was about 5-6 years ago, there were 4 people paying national insurance for every one person claiming it. And with people living longer, that number is only going down. So if you start looking at that and you're looking at the state pension, you take that in one sort of thought process, and then you go into the thought process of now it's becoming a legal requirement to provide a pension to all employees. And the fact, which I'll talk about in a bit, that you have to, even if they've opted out, every 3 years you have to put them back into the pension. There's a feeling here that the government aren't expecting state pension to provide as much, the kind of livelihood it does now, even though arguably that's not a lot, but potentially people aren't going to be able to just live off and rely on that state pension. So, and the reason I point that out is because from my perspective, that just shows how important it is for an employer to choose to be not just quickly choose a pension, but to think about that pension they're choosing for their employees, and not just think of it as like a necessary evil, but think of it as this is a real benefit and something that could, if things do continue to go the way they are, is probably likely to really help your employees. Just think of it like that. So in this process, you have to provide what's called a qualifying automatic enrolment pension to your staff. So there's different kind of ways that you can meet that qualifying term, but you have to basically have a pension that does meet this. And then you've got to pay into that pension, depending on that employee's levels, with a certain minimum contribution each period. One of the challenges with pensions is obviously you've got this qualifying stuff, which is minimum standard that you have to do. But then also what you've got is in your contract, again, what you said at the beginning, you may have some specific contractual pension arrangements. Now, if you're a new employer, you probably won't have these in there, and you're likely to probably omit them from a contractual pension unless you're trying to stand out from the crowd and you beat your competitors in that. But a lot of people may have existing contractual pensions that they have to sort of carry over into this automatic enrolment process, and that's where you have to also still meet minimum contribution standards in that, which might be more than your legal responsibilities. You have to keep records of all the pension stuff that goes through. Complete what's called a declaration of compliance, just to say that you've complied with your duty, so you do have to do that. And and where with payroll you get a PAYE reference, that's kind of your code. With the pensions, you get what's called a letter code, and that's kind of your reference in the way that they track what you're doing, and you can communicate with them, etc. So you get a letter code through the post when you start employing somebody. So I'm going to show you, these are the different types of pension schemes you can run that are qualifying pension schemes. Obviously, you may have higher in your contractual. So the top one there, called qualifying earnings, this is the one that most people will use. It is the kind of what I would class as the default option. The other 3 options generally have been provided for those who may have an existing contractual pension that doesn't quite fit the qualifying earnings criteria. So it just allows for other stuff. So I'll probably skim over those quite quickly, but we'll talk about these qualifying earning ones a little bit. So what it means is that as an employer, you have a minimum contribution of 3% of that employee's wages. The employee will contribute 4%, and there'll be tax relief on that employee's contribution of 1%. So the total minimum contribution is going to be 8% overall. Now, that pension, that 3%, that 8%, etc., that gets calculated based on their salary, their wages, their bonuses, commissions, all statutory payments. So there's quite a lot included as part of that process. And you can see as you go down the list that some of the others actually use different criteria, and that's why perhaps you might have to pay a little bit extra in contributions. Now, one of the scenarios we do sometimes come across is for people that are starting to employ is what's called 2P. So 2P basically means that if you're going from one employment and you have an employment contract in place, and you're moving, if that business has been bought or your employees are moving automatically to another employer, there are certain employment rules that you have to continue to follow for up to 2 years from that employee's old contract. And that's where, particularly for new employers, we're seeing if they're 2Ping employees over from another business unit or somewhere else, we do sometimes see that these step 1, 2, and 3 start to get used as well. Any questions on that before I move on?
Kieran, just about, is there a level that they start to get qualify for pensions, or from when?
Yes. Yeah, I'm going to go through that in just a moment. Yeah. So yes, so there'll be there's a certain criteria they have to meet for eligibility, both in terms of pay, in terms of age, at which point you start paying those contributions. Yeah. So that's 2 slides time.
Oh, mate.
So the timeline for pensions is so you have to, first thing you have to do is you have to choose a pension. Now, what we find a lot of people doing is they go, oh, my employee, I don't need to put them into a pension scheme. And I'll talk about when and where how to put people into a pension scheme. I don't need to put them into a pension scheme, so I don't have a pension scheme. And actually, that's not technically how you should do it as an employer. You still need to have a pension scheme organized. You might not have any employees in that pension scheme. You might not have it up and running officially, but you do still need to have had, know which pension provider you're going with, have the details of that provider, and the basic information, because even if you're not enrolling them into a pension, you do still need to send them letters explaining that there is a pension available for some of your staff. Okay. So that happens generally as soon as you can, even before you employ people, you organize that pension side of things. There's lots of different pensions providers out there. Some you go to some people are going to them just purely because they're the cheapest or the easiest or they're the most accessible. Other people choose it because it's got the best investment that they think for their staff. That's something you have to go, and it's probably worth speaking to a pension provider about, pension advisor about that. So then on day 1 of employing somebody, is what's called your, so the first time you have your first day of the first employee is what's called your duties start date. This is when your legal duties actually begin. And what you have to do is you have to assess your employees to see whether they should be put into the pension scheme. And any employees that are eligible, you have to enroll them into that scheme there and then. So that's day 1. By week 6, you then need to write to all staff whether you've enrolled them into a pension scheme or not, and explain how automatic enrolment applies to them as an individual, and a little bit about your pension scheme and things like that. Because some people, although you won't automatically enroll them, they may be eligible to opt in and choose to go into your pension scheme. Then by month 5 from your duties start date, you can do what's called a declaration of compliance. And that's basically, in short, saying how many people have been enrolled in your pension, what criteria they had. It's just basically explaining what you've done in terms of your duties. And then every 3 years, those who have chosen to opt out, so they should be in the pension scheme. You would have automatically put them in. If they've chosen to opt out as an employee, you'll have to put them back in. So there's quite a lot of stuff going on around this, and normally between your pension provider who you choose and your payroll provider, most of it can actually be done for you. But understanding what to do, when to do it, picking a pension scheme, there's certain things that others can't do. You do have to just do them as part of the process.
Kieran, on this,
Yeah.
as an employer, can you decide which pension you pay into the employee for, or can an employee come and say, look, this is my existing pension, I need to pay into this one? Because obviously that's really complicated. You've got loads of employees with different.
Yeah. Your only responsibility as employer. So there's two answers to that. One is whatever's in the contract overrides what I'm about to say. Because if there's something in the contract that says that you will do that as part of the contract, then you do have to follow the contract. If in the contract it says the employee can choose, then the employee can choose, because that's a contractual decision, not necessarily about automatic enrolment, as long as their pension fulfills the same criteria that it is. But as an employer, generally, no is the answer. You simply have a pension scheme for your employees that you would administer, and it would be just a qualifying scheme. I know some employers, what they do is they have multiple schemes. So they'll have like an automatic enrolment scheme, and then they'll have maybe like an executive scheme. It's often what it's for is, maybe some senior directors might be on a slightly different scheme, which is they pay more into, and it's not, it's not necessarily a personal one, but a slightly more, maybe more aggressive investment, for example. Does that answer your question?
Yeah.
Okay. Now, do all employees need to be automatically enrolled? Well, the answer is no, not everybody will need to be automatically enrolled. There'll be you have to do an assessment process. So when that employee first starts with you, and anytime an employee starts, or anytime an employee's wage changes, actually, you'll have to do an assessment. So every time you run your payroll, what you're doing is you're going to assess the employees and go, do they fit into one of these three areas? Are they an entitled worker, an eligible job holder, or a non-eligible job holder? So most people will probably fall into the eligible job holder if they're full-time employees. So that's age 22 to state pension age, which is that middle one there on the left-hand side of the right sort of oval. They have to have a right to work in the UK and earn above £10,000 a year. So that's about £833 a month. Those individuals there, they fit that criteria, they must be automatically enrolled. Okay. And on your point about qualifying earnings, you would pay, you pay qualifying earnings above what's called like the earnings threshold, which is about £520 per month for somebody like that. I remember rightly. Don't hold me to that. So they'll be automatically enrolled. Then you've got what's called your non-eligible job holders. So these are people that are they're like sort of just outside of this, so 16 to 21 or state pension age and above. So they're kind of outside in the age category, but still earning the rest of it. So they're still a non-eligible job holder. Or those that fall between sort of any age, but they're earning between that 6,240, which is the 520 a month, and 10,000. So anybody who kind of fits that either by age, they're out, or by earnings, they're slightly lower, they can choose to opt in. So what they would do is they would opt into the pension. And if they opt in, they have the exact same rules and rights as an eligible job holder. So anybody in this job holder section, if they are either automatically enrolled or they have the right to opt in, they opt in, what you would do is you'd have to pay you'd have to obviously enroll them, they contribute, and you would also contribute to their pension. And you have to do that. And then what you have is what's called an entitled worker. As you can see, it's basically anybody who earns below that 520 a month or 6,240 a year. Now they can choose. They can choose to join your pension scheme, and this is where it comes back to that point of you have to have a pension scheme, even if you've got nobody in the job holder section, nobody who's going to be automatically enrolled into it. You still need to have a pension available for people who are entitled workers who can opt into that pension scheme. So every employer must have a pension scheme, and when they choose to opt to join the pension scheme, they can pay their contributions to it, but you don't have to pay contributions to that scheme. Most employers will anyway, but you don't have to. Okay. And I guess the reason they've probably got this is it kind of emulates the points, like close to the points at which, as an employee, you'd start paying national insurance contributions and therefore contributing to your state pension, which is why, again, for me as an individual, I'm looking at this and going, it's almost like trying to emulate what's currently being created as part of the state pension and national insurance process. As I say, it's just my personal thoughts on that. Whether it's right is another thing, but it seems to be emulating and preparing for a lack of state pension, basically. Are there any questions on that? I'm conscious that that's quite a lot of information on that one there. I'll take silence as golden.
Yeah.
So that's good. Excellent. So you're an employer, you've got this situation, but what happens if, for example, an employee starts with you and then leaves in week 3? You've had to set up a pension scheme for them. What happens if, for example, employees' wages change over time? What do you do? So I want to talk about something called postponement. So postponement is something that is all employers are allowed to do, and it just adds a little bit of flexibility for you as an employer. So what you can do, you can delay putting a worker into a pension scheme for up to 3 months. You can actually postpone a worker up to 3 months, which basically means in the pay period that you assess them, and because of whatever criteria, age and earnings, they should automatically be enrolled. At that point, you can postpone them for up to 3 months. Now, once that postponement period is up, you'll then have to assess them in that next pay period again. And if they are, those eligible job holders, they should be automatically enrolled. You do need to enroll them into the pension scheme. But where this is, the reason I've said here, when somebody starts, is because the most common time I see this happen is when somebody starts working for you, and particularly if you're a bit nervous about, are they going to be the right person? Have I made the right choice on that person? You can choose to use postponement, delay putting them into a pension scheme. And that will allow you to, often for a probationary type period, to just make sure that employee is going to stick without having all the admin and extra pay, and them having a pension scheme that's been set up with an employer with 1 or 2 months pay. It's contributions. It can get quite messy for the employee otherwise. But you still must write to the staff to tell them, as I said, within those first 6 weeks. But postponement doesn't change that start date. So even if you postpone your employees for your first employee for the first 3 months, you still have only the first 5 months from that first day to do the declaration of compliance we mentioned earlier. Okay. So just to kind of help with postponement, I thought I'd throw a couple of examples in there, just for sort of practical examples of what I think might come up potentially, particularly if you're on like the Kickstart scheme, for example. So what you may find, for example, is this example here, you've got a 24-year-old who's paid minimum wage, so £8.91, working 25 hours a week and starting partway through a month. Now, I've rounded figures up. That's about £965-ish, not 1,000. But I've basically said their first full month is February. So what would happen is in January they're an entitled worker, they're the ones that can choose to join, but you don't have to pay contributions if you don't want to. So you might write to staff here, and then you'll assess them in February, and you'll go, oh, they're an eligible job holder, I need to automatically enroll them. And what you may do there is say, look, let's postpone them. And you can postpone them for up to 3 months. It could be 1, but up to 3 months. But then if they're still at that level, you then would automatically enroll them afterwards. As I said, these numbers, they're only illustrative. I'm just making just to try and make the numbers quite easy for people to see. So that's one example. And I think that's probably a really common one I would see people doing. Not every employee starts on the first day of a month. So I can definitely see people doing this scenario quite a lot. Second scenario, I think that's probably quite, or could potentially be common, particularly if you're employing younger people through the Kickstart scheme, is obviously minimum wage is lower for younger people. So a 20-year-old who's on £6.56 per hour, working 25 hours a week, and then 1 month you decide to get them working a little bit more. So what might happen is, let's say their first month, January, February, they're below that threshold. So they could opt in because they're a non-eligible job holder, but they choose not to. Sorry, yes, they could choose to join the scheme. Sorry, but they may not. You would then, as an eligible job holder, they might in 1 month do some overtime, and rather than automatically enroll them in this month, you might just postpone them for example, 1 month or 3 months or whatever it is, and you could basically assess them in the next month. And at the end of that postponement period, whatever that next assessment period is, whether it's 1 month or 3 months, you could then deal with them based on what that next period is. So are they going to be a entitled worker, non-eligible job holder, etc. But either way, you still need to write to staff throughout that process. So so that's pensions for you. I appreciate I've as I said, I've tried to keep it as top level as possible, but giving as much insight to help an new employer. Employing people, there's a lot to do with employing people on payroll and pensions, but I suppose the gist of all of this is if you understand what you're supposed to do, but then use an outsourced unit. And again, I'm very much being completely biased here because we do it ourselves, but I do believe everyone should outsource payroll because it's just, people just know what they're doing. It can make that process really quite simple, quite straightforward. But hopefully I've given you a couple of hints and tips at the beginning of this that will sort of help kick you off on the right path. If you do want to have a chat either about our services or around any questions that have come up throughout this process, please do drop a Calendly link into my diary. It's quite full, but I will make time for you, and we can chat a bit further about that. That'll be great.
Amanda's just raised her hand as well. So, Amanda, do you want to unmute yourself and ask a question? That
Yeah, sure. So basically, as the CEO, so I'm going to be but it's the charity is now going to be employing me along with somebody else. Do I need to still do like the letters of notice and things like that for myself, even if I know it? Does that make sense?
Yeah. So the answer is yes. You've got to think of yourself from a legal perspective. Is it a charity? Did you say? Yeah. So the charity is a different is a specific legal entity. So the charity as a legal entity has an obligation. You as an employee, even though you're making those decisions, you do still need to do it. So I haven't mentioned it so far, but the only scenario where that isn't relevant is if you are the sole director and employee, so the only director and employee of a limited company or charity, then in that situation, you don't necessarily have to. But if as soon as you have one extra employee, all those obligations come into play for you and for the whole business, whole organization. Does that make sense? Yeah, I appreciate sometimes it's a bit, it's like with directors of companies sometimes having a meeting with themselves. It's just one of those things. You've got to part with it.
How, like on average, how much does it cost to outsource payroll? We're severely under budgeted as it is. So yeah, what's the average price?
It completely depends on what you're getting done for you. So some will just run the payroll, some will do the pay slips, and normally there's a standing charge most of the time, and then you pay per employee, and the rates really vary. I mean, you can be paying anything from sort of £15 per employee to £5 per employee. I mean, there's quite a lot of variability, and generally, obviously, volume. If you've got lots of employees, then it's cheaper. I mean, if you're looking and I can help, feel free to drop a chat in my sometime in my calendar, and I will give you a quote if you want. Happy to do it like that if that's helpful.
Yeah, I guess it's just figuring out, because obviously, as a charity, money's a difficult situation as it is, and it's figuring out whether it's more affordable to for me to do it or for it to be outsourced.
Yeah, I mean, it was one of those things. Just have a look around, and as I say, get some quotes and see what works for you. Because it may be that you choose to do it yourself. Like I said, I recommend against it just because I've seen a lot of mistakes happen, but it's not out of this world to think that you can't. You just have to put a lot of time into preparing it and really looking into the details so you understand it really well.
Amanda, and from my perspective as well, obviously having been in business, I work with lots of charities, and this is like a lot of things you can do it yourself, but I guess one of Kieran's main messages is all this stuff can be done yourself, but it's just complicated, takes up time. Sometimes it's false economies, it's penny wise but pound foolish because you're spending loads of time doing this when you could have been writing a bid for the charity or doing something else. So my personal advice is always to use a good accountant, because there's loads of advice that they have that you might not have thought of, or they generally pay for themselves over a period of time in my experience. So
Look, I'm quite happy to have a chat if you want to have a chat through it. No sort of pressure chat. If you just want to have a sort of talk through, and I can, if I can help, I can give you an idea on pricing. You can quote it out and see what makes sense, and no pressure. Yeah.
So, if anyone got any other questions for Kieran while we're here? Okay, so If anyone wants to book in a time with Kieran to ask anything one-to-one, then just do that with him. I'm sure he's a really good guy. I'm sure happily chat to you. Whether you're watching this live or whether you're watching on the recording on the YouTube channel, I'd advise him to advise you to speak to him. He's helped loads of my clients now, haven't you, Kieran? Whether they're
Yeah.
limited companies, LLPs, partnerships, CICs, charities. It's there's obviously complications with that, and as I said, my advice is always to get a good accountant because and Kieran is one of those good accountants because they add a lot more value than you probably realise. And the other thing with the Kickstart scheme is I think for people that are employing people for the first time, either because they're a small entity before the Kickstart or because they previously had people on self-employed or something like that. It can seem really, really complicated, all this stuff. But if you get good advice, it's a lot simpler than
Yeah,
someone else does.
I think you've actually just reminded me there of something. I don't know if this will help as well. So I'm actually in the process of getting a Kickstart employee for a CIC that I'm part of, and we haven't got a huge budget, but what we do is we just basically just financially forecast quite well ahead. So we're looking at it and going, okay, how long do we need how long will we need to continue to pay this person now, but also after the 6-month period? What would that look like? How does that affect our cash flow? So we tend to do that quite a lot and go, okay, what's the affordability of that? And then as part of it, we've written out sort of job descriptions of what they're going to do. And then on the back of that, I'm looking at funding, just like you said there, actually, I'm looking at funding opportunities that might lend itself well to that scenario, that help achieve our aims. So it has actually almost spurred on where we might not have been able to apply for a funding opportunity just simply because of resource. We're now looking and going, okay, by month 2 or 3, this person is probably going to be able to contribute towards that and that parts of what we do. Can we get funding towards that? So yeah, it probably has spurred us on. We've only at the early stage of this process, and we know what funding. Anyone who's in the funding world knows what funding's like. But it definitely, I suspect, we'll be getting funding to. So it'll end up probably giving us more revenue from that because of the funding that will come in to support that and existing employees as well. So yeah, hopefully that's cool.
Yeah. So overall, the Kickstart's a great thing. It's a fantastic scheme to take people on. If anyone's not using us as a gateway to do that, then feel free to get in touch and we can help you with it. For all these complicated little things that confuse you because you're not used to it, then speak to Kieran, and I'm sure he can help you because and that was the reason for asking Kieran to do a webinar like this. Is there are lots of things like this that early stage employers or smaller businesses that they can seem massive things, but if you get someone to help you with them, then they're not as big a barrier as you think they are. And just that just getting good advice, it pays for itself time and time again. So if no one's got any other questions, I'll thank everyone for their time and let you get off to have your lunch or finish your lunch or whatever you're doing. So thanks, Kieran. Thanks for your time. Thanks for
Thank you. Thanks everyone.
listening. Take care. Bye.